to determine the type of lease and then doing the subsequent accounting after we figure it out. Ravis Rent-A-Car Company leases a car to Ira Ream, an employee, who on January 1st, 2019. The term of the non-cancelable lease is 4 years. The following information about the lease is provided. Title to the car passes to Ira on the termination of the lease with no additional payment required by the leasee. The cost and fair value of the car is $8,400, has an economic life of 5 years. The interest rate implicit in the lease is 10%. It's probable that Ravis will collect the lease payments. Equal annual lease payments are due at the end of each year. What type of lease is this to Ravis Rent-A-Car Company and why? And so I already typed in here kind of like the quick summary of our 5 questions that we're going to ask, or those criteria to determine if this is a sales type lease. And so is transfer of ownership, is the ownership transferred at the end of the lease? And the answer is yes. And so technically one criteria has already been met, and we could already call this a sales type lease. But let's go ahead and finish answering these anyways. Is this a bargain purchase? No, there's nothing that indicates that. Is the lease term a major part of the economic life? Well, it's 4 out of 5 years, so that's 80%. So yes, it is a major part of the economic life. Is the present value of the lease payments and any guaranteed residual value equal or greater than the substantially all of the fair value? And so it's equal annual lease payments to get us to the $8,400. And so the answer is yes, because $8,400 is 100% of the fair value. And is there a specialized nature of the asset? That's no. So obviously we still end up with a sales type lease. Then the second part is prepare a table summarizing the lease receipts and interest income earned by Ravis Rent-A-Car for the 4-year lease term. And so the $8,400 is our initial lease receivable, and we'll use the payment function to calculate the annual lease payment. So we'll say equals payment, open parentheses, rate was 10%. There's 4 periods, and $8,400 is our present value. And so we get lease payments of $2,649.95. Then we also need to calculate the interest income at 10% of the lease. And so we'll say equals the previous balance times 10%. The lease reduction, and I'm just going to actually change this to a positive because there we go. The reduction of the lease receivable is the difference. And so we're reducing the lease receivable by roughly $1,800 to get a new balance of $6,590, which was just calculated as that $8,400 minus the reduction of the lease receivable. And so this, let's see if we pull this, if it'll, yeah, that'll hold. And we should be able to pull all of these formulas down now. And we end up with a 0 balance, which is a good sign that our previous calculations were correct. And let's change these to 2 decimals. Okay. The third part asks us to prepare the journal entries for 2019 and 2020 to record the lease agreement, the lease receipts, and the recognition of income on the books of Ravis Rent-A-Car. So 2019, January 1st, we have a lease receivable and sales revenue equal to the $8,400. Also on the 1st, we need to debit COGS and our equipment leased to others for $8,400. Then on December 31st, we'll show the cash receipt of the payment of $2,649.95, and then we have to break that up between the interest and the lease receivable. So we'll have a credit to lease receivable as well as interest income. Let's indent all of these really quickly. And so we can just from our table pull down the reduction of the lease receivable was the $1,809 and the interest income was the $840. And that's it for 2019. So I can jump down to 2020 and we can just copy the transaction of the cash payment down, and then we'll just resell reference, apparently didn't like that, into the year 2020. And that's it.